Hello, everyone. Brian of TINYCRYPTOBLOG. Today, I'm changing things up a little bit. We're going to just look at some trading charts, keep things interesting for the background instead of just having to watch me. So why are you here? Because I said, I've been here since 2017. Bitcoin's going to go to 1 million. So explain your case, Brian. How is that? And don't mind the 8.46 BTC. That's just my Brave browser. It automatically does that. So the other day I was watching a podcast. It was Preston Pish, Joe Carlasari, Jeff Ross, American Hodl. They're talking about the future of Bitcoin and talking a lot about Bitcoin treasury companies. And if there's one thing that I've seen since my time in Bitcoin and in the crypto space, is that with every bull cycle, you get something that hypes up. You get something that grabs everyone's attention that they all ape into. What did they ape into in 2017? It was ICOs, initial coin offerings. And the whole concept behind initial coin offerings was that either for trading in Bitcoin, or what was more common was there'd be an Ethereum contract and you would send some Ethereum to the contract, and on the day of the release date, you would get your tokens issued on Ethereum. And the whole idea was that it was a peer-to-peer method of raising funds. You didn't have to go through investment banks and stock markets and regulatory loopholes. You could go directly to the people and get the funding. It was kind of like crowdfunding, but with crypto. Well, everyone aped into that, and most people got burned. There were a few projects that made it, but hardly any. Then the 21-22 cycle, what you had was you had DeFi tokens, you had platform tokens, you had JPEGs, NFTs. You had those. Everyone was aping into those. What happened? You had yield farming. You had everyone ape into that. People started making money, and eventually, when the bear market hit, that crashed, and everyone got burned. Some people made out okay, but most people got burned. Now, in this cycle, you've got Bitcoin treasury companies, where the big thing to do is, with the example of MicroStrategy or Strategy or whatever they're calling themselves these days, you've got that as the example and leading the way. And now that we're in an up cycle, in the bull cycle, people are starting to see, hey, this is a way to get profitable. It's no different than in 2017 or 2021 when people would say, hey, we're a blockchain company now, and all of a sudden their stock would go up. I think there was a company in New York State where all they did, I think they did something like they made beverages, but then they said, well, we're going to become a blockchain company. All of a sudden their stock jumped. That's because everyone is looking for a way to make a quick buck. And it's the same thing with these Bitcoin treasury companies. People are looking at this and they're thinking, we can do this too. Now, taking a step back, when we look at this, people aren't necessarily the most intelligent people in the world. An idea comes along and people start to jump in. And then it starts making money. And then you get more people who are looking to make a quick buck. Then they jump on and it drives things higher. And then you have people that say, hey, we can exercise leverage on this. And that drives things higher and draws in more quick buck people and people who just don't want to miss out. And then that drives things higher. And pretty soon there's no one left to buy. All the credit and margin gets called in. And then you have the fast and hard rewind and people getting smashed in the face with an aluminum bat. Well, why does this matter? How does all this and Bitcoin treasuries in this cycle lead to 1 million? Because where we are with implementation and where the technology of Bitcoin is with global adoption. If we look back at two different technologies, the internet, to use a generic term going back to the dot-com bubble of the 90s, and then railroads, which would go back to the 1840s. In both cases, they were emerging technologies. People had this discovery, and you start having this compounding of building, and more people seeing the relevance of the given technology. With the internet, It was a case of, hey, we can do things on a digital platform that doesn't require or that supersedes the boundaries of physicality, of physical space, of having to move things from A to B. Now we can just do things over this internet. With railroads, it was an innovation in technology, in logistics, in moving things from one place to another. Prior to this, the big technology was canals. You had huge canal projects in the early part of the 1800s in the United States and in Europe. You built a canal, you cut things down going from point A to B. You created trade and commerce where it didn't before. You could connect geographical regions that before could only be accessible by wagon, by foot, by taking very circuitous routes via water. That canal would go straight through. The railroad was a way to go overland at less cost for setup than a canal and with less operating costs, less overhead. And it was innovative and people were jumping on there. So coming up with new ways to create sturdier rails, stronger wheels and chassis and train cars, more comfortable coaches, better steam engines, more reliable track. And people started piling in. And pretty soon you had means of the people to invest. They could buy stocks on the nascent exchanges that we had in the day. And that drove up the stocks, that drove up bonds, that drove up all the investment instruments that people could jump in. And people started saying, hey, trains are the thing. Hey, we're hearing about trains. We should get in on this. And people who weren't really deep in the weeds and understanding of the fundamentals and seeing at a very deep and basic level how that technology will transform how humans interact and go about their day-to-day activities, but instead just saw it as an investment. Well, they aped in, to use a modern day term, and they end up getting burned. And when the investments eventually collapsed, that's where the burn happened. But railroads didn't die. The technology didn't die. The financial instruments tied to them, the derivative instruments, those did. But the technology kept growing. And lessons were learned. And the people that learned those lessons, as well as the people who understood the core fundamentals of that underlying technology, those are the people that thrived and grew wealthy once the down cycle hit and then things started to rebuild. Because now there were lessons learned and we knew, okay, don't do this, don't do that. And the people who made poor decisions didn't make those decisions again because they got burned. Some people learned their lessons, came back. Most people didn't. Same thing with the dot-com bubble. People jumped in. They went all over it. Valuations went crazy, and it just stockpiled. The underlying technology was being built, but the expectations and the anticipations and the hype and the want to make money from the people issuing the common stock and the people wanting to make money from buying the common stock hyped everything up far beyond where the technology was. And then as a result, all the leverage, all the liquidity, everything, that bubble burst. The bubble burst. The people that weren't pragmatic or smart or are just prudent about their planning, they got burned, their stocks crashed, the funding dried up, and the players who were smart, who understood things at a core level and planned accordingly, they're the ones that thrived. Post-dot-com bubble, we saw the rise of the internet. We saw the rise of applications and software and tools that enable humans to interact and conduct their daily activities in new and different ways. And today, the internet is ubiquitous and it is completely interwoven into human society. If you were to remove the internet and they were to shut off just like that, the adjustment period would just be dramatic and intense. But look at all the size of the companies and the wealth that's been made and generated and created for humanity and the people who invested in those companies in the derivative instruments, the Googles, the Facebooks, the Amazons. And it's the same thing with Bitcoin now, where for years you've had the core proponents and the people who understood the technology talking about this is how it will change how humans interact with one another and go about their daily activities. The properties of Bitcoin are the very things that change how we interact, change how we think, because it's a fixed supply. It forces us to introduce scarcity because it's peer-to-peer without having to rely on a third party to do verification or manage the transactions. It forces people to accept a system where the system trust is built into the system, and you either accept it and work with it or you just don't. Either or. The system doesn't care. There's no one has one leg up over anyone else. And with the adoption curve, back in 2017, it was still a hobby token, but more people started to recognize, including myself, the true depth and the scope and scale of what this can do for human interaction and how it is truth in a sea of garbage. And then the 2021 cycle, that truth spread even further, where you had the Michael Saylors of the world, you had the investors of the world, the Paul Tudor Joneses, and some of the big names who've made their splash in the past. They started recognizing it as an asset, maybe not necessarily from a technology standpoint, but understanding how that technology as an asset fits into the bigger picture within their scope. And then now in this cycle, you're seeing Bitcoin treasuries, where people are starting, now that we have the Bitcoin ETFs, now that we have a further cementing of Bitcoin into the human world, into the everyday world, including legislation that codifies and creates boundaries, guardrails, and definition, legal, tax, and investment definition. This digital asset, this new scope of technology, with its fundamental characteristics of scarcity, of peer-to-peer, of no centralized control, being censorship resistant, etc., etc. We're now seeing primarily as an investment instrument, as a monetary asset, the value of that. And now that we've had MicroStrategy going on for the last few years, and we're seeing how their stock is going up, and there's a profit motive to drive people, people are starting to look at Bitcoin treasuries, both from a money-making scheme, an income generation scheme, but also as a legitimate asset, as an actual asset in the same manner that Michael Saylor and company is doing it, where it's not just about generating money and then you can issue debt against that and you can earn money off that debt and you drive the value of the stock and you can sell the stock and earn more money and have more money in your bank account, but as an asset that cannot have the supply manipulated, that it can't be like our fiat systems with central banking where the amount of money in circulation increases or decreases and gets manipulated and distorts all the pricing mechanisms in our society. And it makes things, and it decreases the purchasing power of the currencies that we depend on for our everyday economic activity, everything from our paycheck for the work that we do to how we turn that around and buy the things we have in our lives, our necessities, our hobbies, the things we want, the things we need. Bitcoin is the gold, the digital gold that cannot have more mind and have gluts. It's a fixed rate. So why do I say it's going to 1 million? Let's loop this around. Well, I think after this cycle, where the price is, where the scale and scope of adoption is, that is where we're going to see all that change. Because we're going to have our run up. We're going to have the treasury companies that ape in. This is this cycle's new aping thing. We're going to have the people that buy the stock in these companies. There's going to be a crash, but the instruments that our enthusiasm went into, they're going to have their hype and crash. It's just part of, just like Jeremy Irons in Margin Call. We can't help ourselves. That's what we do. That's how we are. That's where we're at with the level of education and how we respond to incentives as human animals. But the underlying technology, the effect of adoption, the penetration of Bitcoin into the social consciousness within the scope of the entire global human population, we'll start seeing these things happen in other continents, in other countries. We're going to come back stronger. And at this point, going from 10,000, 20,000, where we were at the lows of this cycle, up to 120, there's a 10x. Why? It's not going to be any different. A 10x is a 10x. Even if it only goes to 500,000 in the next cycle, I still think in 8 to 10 years, maybe even before then, maybe by 2032, so 7 years, the continued rate of adoption, the penetration of awareness, the understanding of why holding a fixed supply asset has value in this current monetary environment is going to drive adoption. And it's easy as an American to lose sight of this and lose perspective and only see things in the US. It's going to be global. The US has 375 million people. The global population is 8.75 billion. India and China alone, I believe, have 2.5 billion people, if not more. If you get adoption going on in those countries, forget it. Forget it. It's easy to even just perceive the idea of it going to 1 million from 100,000 with the scale of adoption. And mind you, this isn't investment advice. This is just my opinion. Do I have that streaming? Yes, I do. It's just my opinion, but based on what I've experienced and based on what I've learned and seen and witnessed firsthand since 2017, this is my take. I think it's going at least to 2 million in 10 years. It could go higher. It could go lower. But I still think right now that potential, and I'm trying not to let the current bull market fluff, but everything I've learned going through multiple up and down cycles and seeing where the adoption has grown, yes, absolutely. So bookmark this, come back and say, Brian, you were wrong. Brian, you were right. I don't really care. Either way, that's my take. So hope you enjoyed it. Hope it helped. You can follow along Tiny Crypto Blog and all the websites listed in the show notes. And with this, be well, everyone. Talk to you soon.